Welcome back, everyone, to week 4 at Calpo Entrepreneurs. I know it's middle of like midterm time, like this week, next week. So I really appreciate you making the time. We have a really cool meeting, as always. We always have cool meetings, but today's gonna be awesome. I'm very excited. So yeah, thanks for coming out. As always, the structure is going to be like fireside chat style, and then I'll start off the meeting, and then at any point, if you have questions, drop it in the chat, open Q&A. I'll call you up and you get to ask your own question. Today, we have a really, really cool guest. Walter is founder of Acorns and currently CEO and founder of Blast. I'm going to, dive into Blast and Acorns and all that stuff. So if you don't know what these companies do, you'll know, and that's, the next 20 minutes, and you can start asking questions. And if you do, then great. Yeah, so that's my very short, underselling pitch, because we're about to dive super deep into it. I'm gonna start screen sharing, and here we go. Walter, thank you so much for joining us today.
Pleasure.
I really appreciate it. I got some questions. I've been reading up on, Acorns and Blast and, some ventures, and I'm pretty interested in this path you've taken. So first of all, I want to take it back to like the beginning of, your entrepreneurship journey and all that stuff. So I guess I'll go chronologically. What is your education background, first of all? Because, you have some stuff in cosmology, and then you have a bunch of stuff in fintech. So just to set like a foundation, what was your education in?
Well, I barely made it out of high school. The rumor is that my dad bought a color television for the vice principal, and somehow 5 credits appeared, and so I could make graduation. And that was a long time ago, back in the late 60s. But I've always studied since then, studied a lot of math, a lot of history. And so my books and films, podcasts are mostly about math and history. But the business path I took was more what my father and grandfather had been doing, which was securities industry. And they backed companies. My grandfather backed largest cosmetics company at the time. It was called Revlon, and the largest meat company. It's called Armor Foods, and the largest air conditioning company, Trane Air Conditioning. And so I remember my dad was backing a company called Whammo Manufacturing, and they made Frisbees and hula hoops and water slides and stuff. And he was bringing home these products, and I thought, hey, Dad, what is it you do? I'm really interested. And so he told me about investment banking. I was maybe 12 then or something. And seems like just studying it in your spare time is good enough to, be reasonably successful at it when you get older, especially if you have some connections.
So how did, having that influence there, how did you end up in like the cosmology and, all that sciencey stuff? How did that journey happen?
I was just really interested in it as a little boy. And there's a couple of fundamental questions out there in celestial mechanics, and there's some big problems that I'd just like to see if I can solve them. And so, one of them is what's tugging on the solar system right now, that it's some massive gravitational force, and it's sort of rearranging all the dwarf planets. And I think it's due to the precession problem, which is also, another long-standing problem. So yeah, it's just, people do puzzles, people fish. I like to just solve cosmology things. Yeah.
That's awesome. So, I mean, as entrepreneurs, we all, I guess, enjoy learning new things, even outside of our, maybe the startup that we're running. Maybe we're doing it in like, we're doing an e-commerce thing, but, we're into cosmology. So how did you approach, because now you're working with a couple stuff, you're working, you still have the foundation in Newport, right, for cosmology stuff. And then you're also doing Blast. First of all, how do you manage the two? And second, growing up and being interested in cosmology, something that's not just something easy that you can like maybe pick up a book and understand everything or enough to write a book about. how did you approach learning about these topics that you're interested in?
Yeah, so it's just one thing at a time. Something prompts your interest. So, for example, we started Acorns in 2012. I had already sold my other brokerage firms, one with E-Trade and one Roth Capital, and did well. So I could kind of just dabble and do stuff that I like to do. And my son Jeff was just graduating from Lewis and Clark up in Oregon, and with a degree in math. And we had been sort of talking about how the cost of everything was coming down. You know, Moore's law is not just driving down the cost of computers, but everything that computers do, which includes financial transaction. That's a big area, and it's one of the big drivers behind fintech. And so I was kind of saying, you know, it would be really cool to start a brokerage investment company that could appeal to young people and first-time people, because the earlier it can start, the more time your money has to compound, and therefore, you know, you can do well even though you don't have much money. And so, and he said, yeah, and if we do it, Dad, we do it through an app, because apps are so cool. And he had like every cool app on his phone, which I was impressed with. And so, yeah, we just got together and formed it, and, you know, struggled for a year where you just kind of keep rewriting the plan and keep pivoting on certain points. You know, we wanted to make it something where you just swipe your phone at the register. You know, it was called near field communications, but it never really took off. So we had to come up with a different way to effectively round up the change. You know, you connect your debit or credit card. Whenever you use those, we take the difference between what you spent and what the even dollar is, and put that money into your Acorns account. So every time you spend, you're investing and saving a little bit. So it's easier to live a balanced life. And so since then, we've signed up, you know, about 8 million customers, and a lot of them have a really good size accounts now, especially the early ones that stuck with it. And so, yeah, I kind of got interested there. And then Blast was a spinoff of that, where we saw fintech. You know, you don't need to just link it to credit and debit cards. You could link it to gaming. And so it's at a much earlier stage right now. We're still working out some of the product market fit stuff, but it works with like 1 million games, you know, everything in this Steam catalog. And we're having fun building that. And then ATM's another one we have going. I'm chairman there also, and that's helping people to monetize their own data. So all these things really help people save, invest, or get a little bit more money, because I think that's kind of a problem out there. You know, people don't think they have enough money, so let's help them solve that financial problem. And yeah, in the background, we do written a couple books, made a few films. We've done 60 podcasts called The Cosmic Influence, and 10 conferences on precession and ancient knowledge. And we're now working on some screenplays and movies in that category. And I think, you know, it's just been a hobby, but that too will turn into a business at some point in the near future.
That's awesome. I want to backtrack real quick to before Acorns. You know, you were CEO for a couple companies that you brokerage firms that you ended up selling off, and while being CEO, you know, those companies grew pretty fast. So, you know, having experience in growing and selling companies, and a couple of them, what do you think was the reason for such fast growth? Was it the industry? Was your business model just right? Was it leadership? You know, what led to such fast growth?
You know, it's a combination of things. Certainly, you have to have reasonably good management and leadership just to hold it all together. And, you know, especially early on, you're faced with like constant problem after problem, not to mention you don't have any money until you are somewhat successful. And so, yeah, leadership and perseverance is really important. But, when you find a compelling product and a market, and you believe in it, then you can sell that story to others. And that's the basis of raising capital, as you well know. But I think my first company, it was Cruttenden and Company. Then I hired a partner named Byron Roth, and we called it Cruttenden Roth. And then finally I got tired of doing it and sold my interest to him and the other partners. And it's called Roth Capital nowadays. And they've done about 50 billion in financings for mostly smaller companies, like a 10 to a couple $100 million raise on average. There's a few that are bigger, a few that are smaller. But that one, it took me, 5 years to get up to like 10 million in sales, which is a relatively slow pace. But I didn't take in much outside money, so it worked out financially very well, not much dilution. Versus the company I started right after that was essentially to do IPOs online. It was called E-Offering, and I sold it to the idea to E-Trade and said, E-Trade, you put up 20 million bucks and I'll get you more customers because we're going to have so many offerings. And what do customers really want? They want new hot IPOs. And they said, sure. And that one we were able to grow to 10 million in sales per month within 10 months. So, it just really, really took off. And I think the key there was distribution. When I had to hire my own brokers one at a time to build a distribution network for new public offerings and private placement transactions, it was slow. But when I could hook up with E-Trade, who already had millions of customers, and just plug in the deals, boom, we just really took off. So I've always found that distribution is key. And that's what's so neat, why Acorns has taken off so fast, because when the iPhone came along and the App Store, and of course the Google Play Store for Android, that was a new form of distribution, just an easy way to get to a lot of people. And so try to be on the leading edge of new distribution trends, and I think you'll do well in almost any business you go into.
Yeah. So going to Acorns on that note, what was it like starting a business with your own son?
Really fun, and also very frustrating, because it's family. And so you're trying to build something just like you would with a normal partner. And there's enough frustrations as it is, but family, you don't hide much, you just boom, knock down, drag it out. And Jeff was really vocal and I was really vocal. So yeah, we wouldn't fight in front of each other, but we'd go in the back room, there'd be a problem and we'd work it out. We'd both get our passion out, which is great because you really know where a person stands. And then, as we got it going, you'd bring in more and more people, and they're more controlled management decisions. But I think early on, we could actually act a little bit faster, just because, I knew him so well, he knew me so well. Let's get this decision made and then move.
How did your experience in finance and banking, investment banking, how did that transfer over to like creating an app for like a fintech app?
So a lot of that was really new to me. And I wasn't even using apps very much back then, but Jeff really had downloaded every cool app that ever came along. He really had a innate understanding for the user experience, oh, that should be a slide, man. That shouldn't be a button. What are you, crazy? He just kind of knows these things. It was kind of all Greek to me. And I could talk with as much confidence on the back office and how the whole brokerage thing's supposed to be set up. So yeah, I'd download to him, what we need to do. And he downloaded to me, well, this is how it'll look in the app. And then, first it's just wireframes, and then it's decks, and then it's, some pretty good art. And then we start building it, and it's crude prototypes, and you have a bunch of bugs, and you bring on more and more beta users, and, you find out you need 1,000 users to find that 1 in 1,000 problem. You need 10,000 users to find the 1 in 10,000 problem. And, but fortunately it was, attractive concept, and we were able to get a lot of users at a pretty low cost. Not that many people were doing digital marketing back then. So Facebook and Google and et cetera was still cheap.
So I'm curious, within the last year, I mean, millions of people have entered, young people have entered the scene of investing, and, Acorns, which is, the goal is to get people investing when they're young, so the money accumulates. So how's the last year affected Acorns?
Unbelievable. Yeah, no, I think we've done, just in the first quarter, we brought on 800,000 new investors. I mean, it was crazy. Yeah, we had our biggest January ever. And we attribute part of that to the whole meme stock movement, and, Reddit and GameStop and that. And I think some people, frankly, were blowing up on Robinhood, trading for yourself. It seems very glamorous, but the success rate's kind of low, and at Acorns, we're almost an opposite approach. Yes, you can start with a really small amount of money, but you don't pick your stocks. We'll just try to make sure you don't lose your money. It just grows consistently. So you won't have one of these triple it in a month sort of things, but you also won't have these big flame out things. It's all risk reward. And so, yeah, I think probably half the new people coming into the markets are a little bit risk averse, and they just want to make sure that they don't lose too much and they can grow their money at a steady rate. Whereas, there's another big percentage that's, hey, let's go for it. Let's bet the house,
Yeah, definitely. So 5 years after founding Acorns, 2017, you start Blast. What was the what was the potential you saw in, the approach that Blast takes that Acorns wasn't fulfilling?
For me, it was just an opportunity to try a new distribution channel. And so there's gamers out there, there's like 3 billion gamers in the world. And a lot of them are hard to reach, the ones that are playing solitaire or chess or something like that. Might be difficult to reach, but the ones that are playing a lot of the flashy games are fairly easy to reach. They tend to be a young demographic, and we had realized that not everybody's into connecting a credit and a debit card to an account. And, some people, you won't even motivate them unless you hit them where it's fun. We just backed a little company called Play Pulse, and it's like a Peloton machine, but you have to pedal harder to move your tank on the screen. You're playing games on the screen. And so it's the same sort of concept where you get to people through what they love to get them to do something good. In that case, it's not saving, it's exercise, but it's, so yeah, we figured gaming could be a nice avenue to get a lot of people, young people, to open accounts. And even, older people too, that just, they want, there's something called gamer's guilt. And if you can just tap into that a little bit and tell people to save and invest while they game, then it seems like more people want to do it. So, but we're still working on the product market fix, quite frankly.
How does the process currently work though, in terms of, like, let's say I'm gaming, I'm playing a game, how will I be approached to, like, I guess, making put aside money?
Right. So you download the app, and you're asked to connect a game that you like to play, and then you basically do that. And there's different types of triggers in there, and some of them might be very simple, like, a win or game completed or something like that. And others, I'm not sure which ones we have in the various betas right now, but others are, certain amount for a headshot or defusing a bomb or blowing up a tank or whatever the game is. And some people like that experience, and some people just like the simple experiences, like time played or something. But anyway, you're connecting the two. And so as you do the one, it helps you do the other kind of in the background, but not so much a day that it hurts. You're not taking a lot of money out of your account, just little tiny amounts every single day that you're compounding and growing into a larger amount over time.
It's giving me excuses to game for hours now. It's a dangerous game to play. So I want to go back to Acorns and some current trends. So with crypto blowing up, has Acorns, started looking into new like potential, or what's been the direction or response to Bitcoin and all the new cryptos?
Yeah, so that's a great question, because you're always looking to give people what they want, and also do what works from 80 years of academic studies on risks, rewards, and returns, and that sort of thing. And so most of our portfolios are built according to modern portfolio theory, and they're very well balanced. And we give you the maximum amount of return for the minimum amount of risk, and there's always trade-offs there, of course. And we just have the 5 portfolios from conservative to aggressive. But yes, we've had so many requests for people that want more aggressive portfolios, including some Bitcoin in there. And so we just struck a deal. I don't even think it's publicly released yet, but with ARK, Kathy Wood. I don't know if super hot investor out there, innovation, one of the first persons to really get big behind Tesla. And so that'll have some really cool innovation funds in it. And it'll even have a little bit of coin in it, cryptocurrency. And I'm not sure what the final ratios will be, but it'll be diversified enough to reduce some of the risk, and yet people can still say, yes, I have Bitcoin in my portfolio, and yes, I'm in the most innovative, sexiest stocks. Yeah, so we'll balance it all and try to figure, and then we'll say something. It won't be automatically recommended like the robo-advisor currently does. It'll say, and we have this portfolio here too, so you can do that if you want to. It is more aggressive, it involves more risk. But if you're young, and you have a long time horizon, go for it, because those short-term deviations are usually compensated for by higher returns in the market over the long term.
So what about I'm curious in terms of competition, because introducing crypto, I mean, is more of like a keeping up with trends. So I'm not sure if that will be like directly going into competition with like Coinbase or what's the other one, Binance or something. But in general, what's the with investing becoming bigger, I'm sure there are a lot more apps and platforms for investing. What's the competition scene been like?
So there's always competition. I'd say the number one competition is from there's self-directed accounts. You decide what you want to buy, when you want to buy it, and when you want to sell it, and that sort of thing. It's all driven by you. And then there's managed accounts, which is Acorns, sort of the opposite. And so Robinhood's self-directed, Acorns is managed accounts. And I'm sure they will end up adding managed accounts at some point. And of course, we will end up offering some self-directed features now. We're calling one of them passions. You can have your core portfolio and add your passions on top of it, sort of thing. So even though competitors tend to start out in their distinct fields, as they get bigger, you're looking for new areas of revenue growth, you tend to get into each other's business a little bit.
Yeah.
And so, yeah, we'll do that. And but there's a lot of competitors out there. But if you can offer a little bit of what they have, you might not take that market. Like, we don't think we're going to take the crypto market, but those people that think that they do want a little crypto in their portfolio just so they don't miss out, we'll basically keep some of those people from leaving and taking their dollars, to a Coinbase or someplace where it might be more risky, quite frankly. So we'll play the business game.
Yeah, it's a great point. I want to open up to Q&A and let some of the people here ask some questions. So Sophie, why don't you unmute and you can ask your question.
Thanks, Armand. Hi, Walter. Thanks so much for coming out tonight. It sounds like in your career, you kind of saw the whole, the revolution of finance, and kind of that you were in it for kind of a long time back, kind of in the 90s and throughout. So I'm wondering where, kind of with that experience, where you think things like Acorns and kind of all of these young adult focused investing platforms are going in the future, and kind of why there's still so much friction between kind of young people investing.
Okay. By the way, really cool wall behind you. I like it. Cool.
Thanks. I'm lucky enough to live down the hall from Chris in the same loft. So.
Oh, cool. So, I think that there's nothing but constant change. That's what the world is all about. And so I'm not 100% sure I understand your question, but fintech will just keep changing and changing, and there'll be periods of time where new things come in, like the iPhone or Plaid or certain types of technologies that give it a sudden burst of growth because new technologies enable new things to be done. And then there'll be periods where, there's so many competitors in there, there's no new tricks to do right now, and it sort of commoditizes. And so as entrepreneurs, of course, you're always looking for the new thing, but to some degree, or a new way to do something that's existing in a big market already, better yet. But I think the most important thing is, just to be agile. And, it's hard to predict the future, but I did write a book that talks about some of these cycles of time that so many ancient cultures talked about. And they've been amazingly accurate so far. The Greeks called it, the iron, bronze, silver, and golden age. And we went from this very material phase into the next phase where we are now, where you deal with electronics and subtle energies. And, they said stuff like, you'll go from writing to communicating with electrons, what they would call that. And sure enough, that's happened in just like the last 50 years. And so I think if you can follow some of those natural trends, the whole green thing is just a wonderful trend now. Let's all make products that are better for people, and then you're in a sweet spot and can do well. So did that answer any part of your question?
Yeah, it does. I was getting at kind of where you think we are in the cycle of fintech or financial services. So it did indeed. Thank you.
Thank you.
All right. Let's see. Chris, feel free to unmute and take it away.
Long time no see.
Hey.
I was wondering just the cliche question. What's the piece of advice you have for young people looking to start their own companies?
Well, I'll give you the cliche answer is follow your passion. And I wish it wasn't so cliche, because it is so true. if you follow something you really, really, really love, then when you get in all those hard times, you're still going to do it because you don't care whether you get paid, right? You're just doing it because you love it. And so, yeah, look at a lot of business ideas, but don't jump in with both feet until you find that one you love. And for me right now, it's, doing like a feature film based on everything I've been writing in cosmology for a while. I don't know why I'm so excited about it, but I am. And so, yeah, I'm learning a whole new industry, and, I know how to finance it. I know the management issues. But so, yeah, don't limit yourself by saying, oh, well, I don't have a degree in any of that stuff. Just go for what you really love, and then you'll find a way.
I want to follow up on that question. I'm not sure if any of them are here today, but there are some members of Cal Poly entrepreneurs that are starting fintech apps. And I'm curious, having experience with developing Acorns if you founded it, of course. So I guess, and Blast now, in terms of, and someone actually has a questions about legal stuff, but in terms of specifically fintech apps, what would you say are some like things to be, pay special attention to, lessons you learned, and, for coding a fintech app?
Ooh, it's such an enormous field, so basically all areas of banking, from, commercial checking and savings accounts and different debiting credit cards and different types of loans and different types of financings, be they private or public, and different types of investment banking products. Real estate, all asset classes, crypto coming into it. It's all going through this revolution, and it's enabled by the cost coming down to store data, to transmit data, to manipulate data, and there's new trust services and ways to put things together. Plaid is a very important one, and so it's like getting to be a pretty darn complicated field, quite frankly. And I think there's some great opportunities there. And so, a lot of investment money is going there. I don't know, $100 billion. You probably know the numbers better than I do, annualized. But that also means it's going to be really competitive. And sometimes, as an entrepreneur, you want to have a life too. And so you might focus on areas that are a little less competitive, but where there's still plenty of capital available to finance it if you come up with a really good thing. And so, you saw the first few people go into like artificial meats, plant-based meats, and Impossible and beyond, and that you could just see those coming. More people are wanting to go a vegetarian or vegan route, and it doesn't involve all this super technology and complications. It's more coming up with a great brand and figuring out your distribution. If you do make the stuff, how do you sell it at a relatively attractive cost? So yeah, I'd say fintech is great, but there's a lot of fields out there. So just follow your passion.
Sweet. Thank you. I really want to quickly stay on the whole fintech thing. So Annie, if you want to unmute and ask your question.
Yeah, sure. Thank you.
What's the name of the class? Is it fintech? Is there a fintech word in it or something? Or
no. I don't know why I'm muted there. A class there? No, I was just curious, like in general. Okay. There's a lot of the fintech club at Cal Poly is getting big, and then just people are curious about fintech, and a couple of the members are coding a fintech app as well. So
great.
Great, thank you. Yeah, my question is, are regulations increasing the cost of your business model?
Yes. Hi, Annie. I was just on a audit committee meeting call yesterday, and it was, all these accountants and lawyers and independent directors, and it's just crazy. And we're talking about putting in all these checks and balances and systems. And it's essentially, because I was thinking back 30, 40 years ago, it wasn't all this complicated. It's essentially all about honesty and ethics, And so you wouldn't have 1/10 of the paperwork back then. You just wouldn't hire a person unless you felt they were honest and ethical. And you wouldn't do something as a business unless, you felt that. And nowadays it seems like, man, you just got to paper over everything. And so all these regulations have crept in, and it's both a curse because it makes it more expensive for new startups to comply with all these regulations. But it's also a blessing if your particular fintech thing happens to be helping people comply with regulations faster, cheaper, better. And there are some of those coming out. It's called RegTech, as you probably know. And so, yeah, I think it's too bad that's happening, but some people will make money from it. So take your pick.
Thank you.
One last question about Blast before we have a couple general ones. Connor, do you want to unmute?
Yes. So thank you, Walter, for being here. It's been good. I think, I believe if I'm mistaken, there is going to be a fintech concentration at some point, which will be really cool. Or at least that's what I've been told. So that sounds awesome. And then let me go back to my slide.
I would agree with that, by the way. Everything, I remember even early days of memory and computers and stuff like that. It would first come, there'd be this huge flourishing, 50 microcomputer companies. And then you get down to Dell and Apple and a couple others. And same thing with disk drives and everything else. Yeah.
Yeah. So I guess my question was just like on Blast, can you earn rewards without it actually coming out of your bank account, or is it all coming out of your bank account? And the second part to that was, will it always be in US dollars? Will there ever be stable coins or Bitcoin or anything like that being paid out?
I love that. You think just like our gamers do. There's a guy that runs that side of the business. He's called Barat. He's from Turkey. He's an immigrant, just super cool guy who, he's playing games about 8 to 10 hours a day before we hired him. So that's why we got him, because he just knows the inside and out. But he's big on letting people do things, get enough rewards, and that's the way they get their capital together, so to speak. So he's just coming out with a few things, including one of the betas we have going is for a new, we started off with game-based savings, which frankly isn't that sexy. And so we're just introducing game-based investing, which is sexier. And so, how you have these little surprise boxes and games now and then, and there's rewards there. And so I think he calls it Stock Box, which was a back office term. I literally was a clerk and I had to search for the certificate in a stock box when I started. But it'll be a way you basically can get a share of stock or a fraction of a share of some stock in these things. And so, yeah, you're thinking just like he's thinking. You must be a gamer.
You know it.
That's really cool. That's actually really cool, because you open a box and it's like, damn, I just got like a dumb item I have like 20 of, but no, this time I got a stock. That's super cool. Yeah, I want that box. All right. Thanks, Connor, for that. I think I skipped someone's question. So yeah, Michelle, if you want to unmute and ask your question.
All right. Thanks so much, Walter, for joining us today. My question is pretty terse. What makes a great entrepreneur?
Okay. Hi, Michelle. What's that say behind you? Is it learn by doing? Yeah.
Yeah, learn by
Just
doing.
see the by doing. Okay, learn
Yeah.
by doing. Yeah. We have a little subsidiary called Learn and Earn, where parent puts up a little bit of money, or a sponsor puts up money, like Salesforce or Code with Glossy or Gemini, and then you take a tiny little test or quiz, and if you get the questions right, you get $1. Effectively, from that sponsor, it goes into your account. So you learn and you earn, and you learn about investing at the same time. Yeah. So can you repeat your question one more time?
Yeah, that was awesome. I was just, what makes a great entrepreneur?
Yeah. People come at it from all different angles. It sounds like a simple question, but it's really a good question, because I do as much investing as I do, starting companies. And I'm always looking at it. And, sometimes you're looking for the best guy in the industry, and that industry is changing a little bit, and you want to just back the best, figuring he'll know where all the changes are. But sometimes it's somebody completely out of left field. They've come from a different industry, and it's that experience that helps them to see some change that's going to totally disrupt, a traditional industry. And so, do you back the guy that knows the industry the best, or this guy that's got this crazy idea, like Uber, that's going to, basically delete the cab business, because they're so successful at it. So early in my investment career, there was a company. There were coffee shops all over the place, and some company came out and said, we're going to have these really cool types of coffee, and we're going to charge like 10 times more than anybody else charges for coffee. And we're going to be everywhere, and that turned out to be Starbucks. And who would have thought of backing a coffee shop? You just didn't think that way. But it was a trend that was happening. And then there was another one. It was, we all grew up with sneakers, tennis shoes, and you didn't have really special shoes for everything. And this guy said, we're going to have these shoes just for running, and we're going to build them better than anybody else. And we're going to charge like 5 times the amount it costs to buy any other shoe. We as investors look at it like, you're going to charge 5 times as much for a tennis shoe? You're crazy. It turns out to be Nike. So you never really know. It's more of a gut feel. And yeah, it just takes a unique approach to something that's the right thing at the right time.
Could I add on to my question really quickly? I was just going to ask, in that case, as an entrepreneur, do you feel as if you take shots in the dark more than you do feel like this is going to go somewhere, or is it more the opposite?
You do take shots in the dark. Yeah. And I personally take a little bit of a barbell approach where, I like to invest mostly in things I really know and understand, because I think I might have a little bit of an edge there. But sometimes, these entrepreneurs, you're getting 10 business plans a day, and, there's just things that sound cool and interesting. And so this Play Pulse thing, I decided to take a flyer on. I don't know anything about exercise equipment other than a few things at the gym. But I like their game-based approach to exercise, and I think it can really help a certain demographic and kids and stuff. And so, it's a total crapshoot, but we'll see what happens.
Awesome. Thank you for the insight.
Yeah.
All right. I think we have time for one, maybe 2 more questions. So Maxwell, if you want to unmute, take it away.
Sounds good. Thank you again, Walter, for coming to speak to us. I was just interested in learning a little bit more about your experience with IB and sort of your experience in like a big operational corporation before jumping into entrepreneurship, and like what your key takeaways were from IB and that operational experience.
Yeah, that's another good one. I'm really passionate about it. Investment banking is that's what you mean by IB, I assume, right?
Yes. Yeah.
Yeah. Okay, good. Just making sure our terms are right. It's so fundamental, and you see investment bankers go into all sorts of fields because yes, you're studying and you're learning the basic mechanics of finance, but more than that, it's looking at all these different businesses because you're funneling money into the ones that you think have the best attributes for success. And so you're becoming a good investor, but also, you're understanding what it takes to get a business financed. And that's so helpful when you want to go out into your own field. Lately I've been meeting a lot of people in the movie industry, and met some great screenplay writers and directors and producers and stuff. And most people know like zero about finance. They're just really it's a finance poor industry. And you hear about all these crazy deals done in Hollywood, and so many people lose money. And I really think, having an investment banking mindset, you can just structure deals so much better than they've traditionally been structured, in my opinion. So anyway, yeah, good fundamental field, maybe.
Sweet. Thank you.
Okay, I think I cleared the queue. So yeah, if there are any more questions, drop it in. If not, I'm gonna wrap this up. David, I saw you hop in recently. Welcome. I was shocked not to see you before. Yeah, if there are no more questions, thank you so much for joining us, Walter. I really appreciate it. That was super insightful. Enjoyed that conversation. Yeah, so everyone, if you need to head out, please feel free to do so. Thank you for sharing your time with us. That was Walter. And of course, next week, real quick announcement, not to take away spotlight, but next week, week 5, we have the founders of our very own Gyaki Yerba Mate. It is happening on Friday, not Tuesday. Not this Friday, the next week, but Friday, not Tuesday. Friday, not Tuesday. I say it because, anytime we switch a day, it just like the world goes to shit for whatever reason. So that's happening next week. And I saw a lot of new names. If this was your first time back after a year of not joining us, or this was your first time joining us, please stay connected. Those are our social media handles. We post everything there, and that's our website at the bottom. I'm sure Kaylin's going to sneak in the Slack channel URL. If that was it, that's very funny. That was great timing. Yeah, stay connected. I'd love to chat and meet you and get connected with you if this was your first meeting. And yeah, that's about it. Good luck on your midterms. I know it's midterms week, and thanks for joining us this week. I'll see you next Friday.